Welcome to Domain 1, the process of auditing information systems. This domain will account for 21% of the exam, and it's really the guts of an audit. This is where we talk about how you actually conduct an audit. At this point, we're not as concerned with regulations and laws and technical issues so much as we're concerned with actual auditing process. And it is a formal process. It's a science, it's not an art. Now for the test, again, this is 21%. But I would say as an actual auditor in practice, this is exactly the place to start. Domain 1 should be the process. We need to get in the habit early on of having a methodical, scientific approach to auditing. In this domain, we're going to have several lessons that walk you through the process. So let's go ahead and get started with Domain 1. After completing this domain, Domain 1, you'll be able to understand basically what an audit is and how an IS audit function should be managed. You'll be able to detail the CISA IS audit and assurance guidelines and standards. You'll be able to discuss risks and how to analyze them, and discuss and understand internal controls. You'll also be able to explain the control assessment. You'll be able to demonstrate how an information system audit should be performed, and expound upon the details of the audit process. Possibly most importantly, you'll be able to apply the CISA audit principles to your audits. The CISA divides up the task for the test into task and knowledge statements. We focus the lessons on knowledge statements, but those include the tasks as well. Task statements are what a CISA candidate is expected to know how to do or perform. Knowledge statements are what a CISA student should know. If you first know the items involved, then applying them is all that's required to perform a task. So while we break the lessons down by knowledge statements, you will also learn to perform the tasks. Tasks and knowledge statements establish and maintain the process of auditing information systems. Tasks can be mapped to more than one knowledge statement. Now within this and the subsequent lessons, we're going to walk you through what you need to know to pass the CISA. It's important that you take time to study and make sure you fully understand each of these lessons before proceeding to the next lesson. Let's begin with CISA Domain 1 Knowledge Statement 1.1. That knowledge statement tells us that knowledge of CISA IT audit and assurance standards, guidelines, tools, and techniques, the Code of Professional Ethics, and other applicable standards are all required for those hoping to become CISA certified. There's an explanation for this knowledge statement. First and foremost, the credibility of any audit is based, at least in part, on the use of commonly accepted standards. It just so happens that CISA is a global pioneer of IS assurance and audit guidelines, tools and techniques, standards, and has a comprehensive code of professional ethics. CISA standards provide you with a benchmark for any information systems audit. Now the main areas that are covered under this knowledge statement include first and foremost the CISA Code of Professional Ethics. That's important to keep in mind because CISA will emphasize this in the CISA exam. You need to know the Professional Ethics Code and be able to apply it to scenarios that you're given. CISA Information Systems Assurance and Audit Standards Framework, as well as Information Systems Assurance and Audit Guidelines, will be covered, but in less detail than the professional ethics. In other words, for the framework and the guidelines, you need a general understanding. The CISA Information Systems Assurance, Audit Tools, and Techniques will permeate the CISA exam. You'll see some under this knowledge statement, and other tools and techniques will show up in other knowledge statements and even other domains. And finally, you need to understand the relationship between guidelines, tools, techniques, and standards. The Code of Professional Ethics is critical to understand. We're going to read it right now, pausing with certain portions to give a little extra commentary where needed. CISA set forth the code governing the professional conduct and ethics of all certified AS auditors and all members of CISA. Members and certification holders shall support the implementation of and encourage compliance with appropriate standards, procedures, and controls for information systems. Perform their duties with due diligence and professional care in accordance with professional standards and best practices. Serve in the interest of stakeholders in a lawful and honest manner while maintaining high standards of conduct and character and not engage in acts discreditable to the profession. Maintain the privacy and confidentiality of information obtained in the course of their duties unless disclosure is required by legal authority. Such information shall not be used for personal benefit or released to inappropriate parties. Now, this last one requires some extra commentary. As an IS auditor, you're going to see all sorts of confidential information, perhaps be exposed to proprietary data, processes, plans, personnel information, that sort of thing. You must make confidentiality a cornerstone of your professional ethics. Members and certification holders shall also maintain competency in their respective fields and agree to undertake only those activities which they can reasonably expect to complete with professional competence. What this means is, first and foremost, you have to continue learning, make sure you increase your competency, you're aware of new techniques and strategies, and also make sure you don't take on projects you're not fully qualified for. Inform appropriate parties of the results of work performed, revealing all significant facts known to them. Support the professional education of stakeholders in enhancing their understanding of information systems security and control. This last one also bears some commentary. The entire purpose of an audit is to inform the stakeholders of the situation of their information systems. How does it stand in a relationship to security? Well, your job when the audit is over is to educate the stakeholders. Failure to comply with the Code of Professional Ethics can result in an investigation into a member's and/or certification holder's conduct, and ultimately in disciplinary measures. ISACA may choose to ban you from ISACA or to revoke your certification if the situation warrants it. IT Audit and Assurance Standards Framework established by ISACA has specific objectives. IS auditors should be informed of the bare minimum level of performance needed to meet the professional responsibilities set out in the Professional Code of Ethics. Now keep that in mind. These standards are the minimum. You should always strive to do better. The standard should also inform the management of the profession's requirements concerning the work of audit practitioners. And these standards should also inform holders of CISA certification that failure to meet with these standards may result in a review into the CISA holder's conduct by the ISACA Board of Directors, which may ultimately result in disciplinary action. ISACA IS Assurance Audit Guidelines provide additional information on how to comply with ISACA Information Technology Assurance and Audit Standards. The information systems auditor should use professional judgment, which means sometimes you may differ from the standards, but you need to be able to justify any difference. The guidelines are documents that are all identified by a prefix G followed by a number, for example, G10, G12, G20. There's actually 42 categories of guidelines. In the next few screens, we'll briefly look at all of them. You don't have to memorize them, and therefore we won't read every one to you. I will point out a few of them that are of particular importance on the certification test. What we see here, due professional care, that ties directly in with the Professional Code of Ethics, so G7 is particularly important. There's an entire knowledge statement on G10 audit sampling, which discusses how to do proper sampling. Audit evidence requirement G2 also is prominent on the certification test. G15 planning, a properly planned audit, is the only way you're going to have a good audit. And of course, G20 reporting, the way you report your audit, is essential to communicating your findings to the stakeholders. G28 computer forensics may seem like an odd one to you. It's not required that you be a forensics expert or professional, but there is a forensics component and you need to have at least a basic understanding of forensics and able to effectively conduct an audit. Continuous assurance, G42. Even if your audit shows that everything meets standards, are we sure it will still meet standards a week from now, a month from now, any time period between now and the next audit? G38, access controls. Those are always a common point to check during your audit. ISAC also has standards and guidelines related to audit, the ITAF. And you can see here a listing of those standards. As with the G standards, you don't have to memorize each of these, and we won't read them to you, but you should be familiar with them. This concludes Knowledge Statement 1.1. CISA Knowledge Statement 1.2. Knowledge of the risk assessment concepts and tools and techniques used in planning, examination, reporting, and follow-up. First of all, your overall audit plan has to focus on business risks related to the use of IT. Now, throughout this course, we're going to look at a lot of methodologies, standards, and techniques. But if you think about it for just a moment, I think you'll agree that information system auditing comes down to one simple concept. Identify the risks a business faces, look at the controls in place to mitigate those risks, and evaluate the efficacy of those controls. That's really what auditing is all about. The area under our audit represents the audit scope. We're not going to audit everything, so let's find out what we are going to audit. What is the scope of our audit? Auditors should use risk analysis techniques to find out what are the critical areas to focus on within the audit scope. In other words, you determine the audit scope by risk analysis. You obviously have limited audit resources. You don't have an infinite number of personnel, number of hours, or number of dollars to spend on an audit. So this requires a focus in drawing the audit plan, and the focus is on the risks that are important to this business. It's also important to prepare a proper audit report. Think about it for just a moment. Once you're done with your audit, one of the big goals is to inform the auditee of the issues you found and the remediation steps you recommend. The primary communication vehicle you have for this is your audit report, so writing a good audit report is very important. Follow up on issues that are found in the audit. That's also very critical. It's not enough to identify an issue. It's not even enough to recommend remediation. There has to be some process to discover if follow-up if the remediation was done. The main areas we'll look at in this lesson include risk analysis. Now, throughout this course, you're going to see other looks at risk analysis, but we'll begin in this lesson looking at risk analysis methodologies, processes, and techniques. This leads us to audit methodology. Now, that's another issue that will permeate the course. Obviously, various methodologies will begin in this lesson. Our whole focus is on risk-based auditing, using risk analysis to drive the entire audit process. We also will be discussing inherent risks in the audit itself, what we call audit risk and materiality. We'll begin looking at risk assessment, how do we determine what is a risk, and treatment, what are our steps to remediate a risk. This will involve beginning your introduction to risk assessment techniques. We'll also be discussing reporting techniques and follow-up. Let's start with looking at risk analysis. This is a process that helps an auditor recognize the vulnerabilities and risks. That's the first part. You have to be aware of what the risks and vulnerabilities to this specific organization are. Now, some risks and some vulnerabilities are common to everyone. Everyone is at risk for a virus outbreak. Everyone is at risk for a fire in the server room. But we also have very specific risks to specific industries. Then we need to look at how do we define controls that can be put in place or may already be in place to mitigate those risks. Now, throughout this lesson, you're going to see several different phrasings of the definition of risk. They're all worded slightly differently because they come from different sources, but they all essentially mean the same thing. Let's start with this first one. Risk is defined as the mixture of the likelihood of an event and its magnitude. First of all, an event we're defining as some negative incident. How likely is it to happen? Some events are more likely than others. Not everything has an equal likelihood. For example, for any organization, the likelihood of a hard drive crash in a server is relatively high, but the likelihood of an intrusion by a state-sponsored cyber terrorist is only high for certain businesses, high-tech companies, defense contractors. It's extremely low for a pizza delivery business or a bookseller. So we have to look at the likelihood of an event. Then let's look at the magnitude. Not all events have the same magnitude for every industry. Let's consider a hypothetical. An event that causes your web server to crash and to be offline temporarily. Let's assume your business is pizzas. You sell pizzas. You have a chain of pizza restaurants. If your web server is down, some of your customers will not do business with you during that time. They can't order online, so they will order from a competitor. You will lose some business. But some customers will come into your restaurants and eat there. Some will come in and get takeout. Some will phone in for their delivery orders, so you will lose some business, but by no means all. Now let's assume the same web server crash, but your business is that of e-commerce. You sell things online, it's what you do. If your web server is down, you are making zero money. You're losing all dollars for every minute the web server is down. Now in both scenarios, the web server going down is negative. It's a risk. But the magnitude is different in the second scenario than in the first. Let's look at another definition that's very similar. IT risk is specifically the enterprise risk associated with the ownership, use, operation, influence, involvement, and adoption of information technology within a business. Now let's think about that for just a moment. We all like new technologies, myself more than most. The convenience, the productivity, all these things that are afforded us by new technologies. But every technology also involves a risk simply by owning and using it. For example, we already mentioned websites that expand your customer base, let you sell to customers more conveniently, and in some cases to customers in other areas that you normally wouldn't get to reach. However, every website is vulnerable to denial of service attacks, SQL injection, cross-site scripting, and a variety of other attacks. Smartphones. These are now ubiquitous. Everyone has one, and I personally depend on mine all the time. And many people now bring these phones into their workplace and connect them to the organization's Wi-Fi. This is referred to as BYOD, bring your own device. Well, that poses a lot of risks. Yes, it's incredibly convenient, and it allows employees to blend work with personal time. They may, on their own time, address a work issue through their phone, and they may be able to take a critical personal issue, such as a sick relative, and still come to work because of the access they have with the phone. So it blends our worlds. However, you now have attached to your Wi-Fi a diverse number of phones with a wide range of operating systems, software, and hardware. This is a risk. So every technology, just owning it and using it, gives us some risk to the enterprise. Let's consider two other definitions of risks, and these are slightly worded differently, but very similar and almost identical in meaning to what we've already seen. The probable frequency and probable magnitude of a future loss. Now, what I really like about this definition is the use of the word probable. It's unlikely that you'll be able to know exactly how frequent an event may occur, or the exact magnitude. You have to perform an estimate. The second definition, the potential that a given threat will exploit vulnerabilities of an asset or group of assets and cause harm to the organization. Now this comes from the standard ISO 27005, which you're definitely going to see on the CISA exam. Not just this definition, but you'll see more about the standard, and we'll revisit again in future lessons. Definitely be familiar with ISO 27005. But I like this definition because it emphasizes two things. First and foremost, we're concerned about harm to the organization. If a particular IT system is offline, but it doesn't harm the organization, it's not that big a concern. If you have 20 printers and one of them is offline, it's an inconvenience. It doesn't have great harm to the organization. I also like this definition because it's talking about the exploiting of vulnerabilities, and that's what we're really concerned about in risk mitigation. Now, the process of risk analysis is complex and involved, and it's applied in a variety of areas, such as disaster recovery planning and business continuity planning. But let's look at it specifically from the auditor's point of view. From the information system audit point of view, risk analysis is used for the following purposes. First, it helps the auditor identify threats and risks within the IS environment. We've already stated that your audit has to be risk-driven, but that begins by identifying the threats and risks that are of most concern in this specific environment. It also lets you plan the audit by looking at the controls in place, and we look at those controls in light of the specific risks and threats we've already identified. Now you're in a position to know the audit objectives. You're basically testing to see if the controls in place appropriately and adequately mitigate the threats and risks you've identified. This makes decision making a much easier process when you're using risk-based methodology. Now on the right-hand side of the screen here you see several steps. These are actually occurring initially in a linear fashion for our initial audit, but then in an ongoing basis. Let's start with identifying business objectives. This literally means, what is the business trying to do? Now, you can think about this in a very broad scope, but we're being more specific. For example, if you have a pizza business, their objective is to sell pizzas, but we need to break this down much more fine-tuned. For example, the objective of the website is to allow people to order online. Underneath that objective, we have sub-objectives. We want to be able to effectively and securely process credit cards. We want it to be a user-friendly experience, and there may be a host of other objectives. But before you can even begin looking at the audit, you have to know what the business is trying to do. Now that flows very naturally into identifying those information assets that support the business objective. It may sound odd, but normally an organization has a number of information systems, some of which are not absolutely critical to the business objective. We're concerned about those that are. Again, if you have 20 printers, and most of your business is online anyway, doesn't require printing for each transaction, printing is used for things like monthly reports and invoicing, well then one printer being down is not a big concern. The web server being down is a huge concern. Now that you've identified the information assets that support those business objectives, now we flow straight to doing a risk assessment on those assets. What are the threats to those assets? What vulnerabilities are in those assets that would allow a threat to be realized? And what would be the impact? Now, impact often involves something we haven't discussed yet called a criticality analysis. That's just a nice way of saying we look at each particular asset and evaluate how critical it is to the organization. And that's often based simply on how much damage would it cause if that particular asset wasn't available. Now that you've done a risk assessment, now we can do risk management. Let's look at the risks and map them to existing controls. Although that can be an involved process, it really comes down to two questions. Are there controls in place that address each and every risk you have? Any place you have a risk that does not have a control, that's an obvious place that needs to be addressed. The second question is, assuming there is a control in place for that risk, does it adequately mitigate the risk? Does it bring the risk down to a level that's tolerable? Once you've done that, now we can do risk treatment. Let's look at those risks that are not mitigated by existing controls, or at least the existing controls don't adequately mitigate it. Now, as I mentioned, your initial audit, this is a linear process. But I think you'll agree things change. Business objectives change all the time. Sometimes a business may add on new objectives. They may leave old objectives. They may add on a new line of business or abandon a line of business. Information assets definitely change. There are new operating systems. There are changes to hardware. All of these change things. Certain threats change. For example, SQL injection is still a threat, but it's less of a threat today than it was 5 years ago. Denial of service attacks are still a big threat, but a specific old one called a SYN flood, S-Y-N flood, is not near as much a danger today as it once was due to modern firewalls. Threats have changed. On the other hand, there are new threats that didn't exist 5 years ago. All of these changes cause this process to now become cyclical. We will reevaluate the risk and repeat the process. There are some basic risk assessment terms, and these are borrowed from business continuity and disaster recovery planning. that you need to be familiar with. Assets are the resources you're trying to protect. Now, your natural inclination may be to think about servers, and those are certainly assets. But I think if you'll reflect on this for a moment, you'll agree that in most cases, the data on the server is worth a lot more than the server itself. Risk, and this is yet another definition that may seem to be worded differently, but means essentially the same that we've seen so far. It's the potential that a chosen action or activity will lead to a loss. Threats, any negative action that could harm a system. Vulnerabilities, any weakness that allows a threat to cause harm. Impact, the severity of damage. Whenever possible, we like to express this in dollars. Now, to express that in dollars, we have some very specific formulas. These formulas are also borrowed from disaster recovery and business continuity planning. Exposure factor. This is the percentage value of an asset lost due to an incident. Now, what we mean is in many cases, you won't completely lose an asset. Let's assume you have a database and you do a full backup every hour. Then the worst you can lose is 59 minutes worth of data. Because if the database crashes 1 minute before your next backup, you will have lost those 59 minutes. You can recover all the other data. Now, if we look at a single loss expectancy, that means what do we lose in a single negative incident? We start with the asset value, how much is the asset worth, times that exposure factor. That will give us a single loss expectancy. Next, we have to consider the annual rate of occurrence. That's the number of losses you might expect to have in a year. Now, this can be effectively estimated through a number of different methods. First, look at previous years. What was the number of losses last year and the year before? Then there are a variety of security firms that every year publish reports that tell you the preceding year's various losses, various attacks, various threats, broken down by industry and size of company. For example, insurance companies that do over $20 million a year in business, but less than $100 million, how many virus outbreaks do they have on average? That sort of information is publicly available. Now, I want to stop and point out something here. There are a number of things throughout this process that are estimates. Annual rate of occurrence is one. But as I was just indicating, an estimate doesn't mean a wild guess. You shouldn't just think and come up with some random number, annual rate of occurrence is 15 times. That's very ineffective and in fact counterproductive. But if you look at your prior year's annual rate of occurrence, how many virus outbreaks did you have a year ago, 2 years ago, 3 years ago? Is there an upward trend in them? If you look at industry reports that give you the norm for your industry and size of business, and you use all of this to estimate the annual rate of occurrence, then yes, it's an estimate. No, it's not exact, but it's a good estimate. You should do the same thing when looking at asset value, exposure factor, or any number of factors that we've already discussed or will discuss where we say it's an estimate. Estimates should never be guess. I would also recommend that in your final audit report, you actually include the basis for your estimates. Where'd you get this number? Now, with that said, we're ready to compute annualized loss expectancy. That's the yearly cost due to a risk. You take the single loss expectancy times the annual rate of occurrence. And normally this is done per asset per risk. In other words, the web server and denial of service attacks. What's the annualized rate of occurrence? What's the annualized loss expectancy? Now, the reason we do this is we can now calculate the cost effectiveness of mitigating controls. Let's say you've identified denial of service attacks as a risk to your website. Let's say you have 10 occurrences a year. Each one costs roughly $1,000. So $10,000 a year will be lost. Well, now we have to ask a question. What will it cost to mitigate that? If there's a control that will reduce that to 2 times a year, so our loss goes from $10,000 a year to $2,000 a year, should we implement that control? Well, it's a very simple formula. How much does the control cost? If it costs $5,000 but saves us $8,000, then it's well worth it. If it costs $15,000 and saves us $8,000, we're actually better off without it. Now let's look at the 3 formulas at the bottom that use these terms. Again, some of these items, like annual rate of occurrence, will be estimates. Exposure factor will be estimates. But please use as much data as possible to make these good estimates, not just wild guesses. If you take the value of the asset, however much it was worth, that can include purchase cost, maintenance cost, development cost, whatever the complete value of the asset is, multiply that by the exposure factor. The result is the single loss expectancy, how much you expect to lose if there's a single loss. What is risk? Well, you take the probability of something happening times the cost if that happened. For example, what would it cost you for your server to be down for a week? Let's say your web server. Calculate that cost. Now that should be something you can do with concrete numbers with very little guessing. Now you try to estimate the probability of a risk, multiply that times the cost, and you have your risk value. Next, let's look at annualized loss expectancy. You take that single loss expectancy you previously computed, multiply it times that annual rate of occurrence, and remember this is an estimate, but it's an estimate hopefully based on statistical averages, past performance, and reports from industry. But in any case, once you multiply ARO times SLE, you have the annualized loss expectancy. These three formulas and these terms are central to impact analysis, thus they're central to business continuity planning and disaster recovery planning. In other words, this is how you calculate risk. Risk should have as little guessing as possible. The risk-based audit approach is simply based on the concept of determining which areas should be audited based on the level of risk. The things we've already talked about, including the formulas we just looked at, are how you decide the level of risk. Now, once you've looked at a risk and you've looked at controls, even added or enhanced controls, you have not totally eliminated risks. There is some risk left over, and that's called residual risk. Now, how much residual risk is okay? Well, that depends on the management's risk appetite. So the goal of an audit is to make sure mitigating controls reduce risk, take that residual risk down to a level that's acceptable to management. We have another risk, risks in the audit itself. These aren't risks from outside threats. These are risks, for example, your report might contain an error that's material. A simple typo isn't what we're concerned about, although those certainly look bad. We're concerned about an error that's material. This can be through some mistake in your reporting or auditing process. Or it's possible that an audit might not detect a specific threat, risk, or vulnerability. That audit risk that something might be undetected is very important. Now, risk assessment. We've already looked at that in some depth. Let's summarize it now. Risk assessment involves identifying risks, prioritizing them, which are more important, and as much as possible quantifying the risk. That involves some of those formulas like ALE and SLE that we already looked at. Now we evaluate those against some criteria for risk tolerance. What are the objectives and risk tolerance for this organization? Risk assessments have to be carried out regularly because things change. The risk environment changes. Regulatory requirements change. Legal requirements change. The risk appetite of a business may change. So it's not adequate to base your audit on a really old risk assessment. The risk assessment should either immediately precede your audit or very soon before your audit. Once you've identified a risk, while we may have dozens and hundreds of different technological answers, all risk treatment comes down to 4 categories. The first is risk mitigation, and this is by far the most common. It's a control that lowers the risk, hopefully lowers the risk to the point that the residual risk is acceptable to management. Now, one you might not have thought of is risk acceptance. You objectively and knowingly choose not to take action. Now, this is not lack of action due to ignorance. You weren't aware of the risk. What happens is you did the risk. You looked at mitigating controls, and using formulas like the ALE and SLE formula you've recently seen, you determined that the cost of mitigation was much, much more expensive than the cost of loss. Or you determined that the likelihood of a particular threat was so low as to be almost impossible. Any of these criteria may lead you to simply accept the risk and not implement mitigating controls. Now, before you take that course of action, This absolutely must have management buy-in and should absolutely be documented thoroughly. Why are you choosing to accept the risk? Risk avoidance is something we prefer but rarely can do. You literally evade the risk. There is zero chance of risk occurring. That's hard to do. In most cases, the best you can do is effectively mitigate. Now, risk transfer or sharing, that used to mean simply you have vendors, partners, suppliers that take on part of the risk. But more and more we're seeing insurance companies issue IT breach insurance. So they share the risk. They take on the cost of some issue should a threat occur. Whereas we will look at many different methods throughout this course, they really come down to a few different criteria, a few different properties that all risk assessment methods have. Now, there are some formal methods like the scoring system method and judgmental method. First, remember that a combination of methods can be used. You don't have to pick a single risk assessment method and stay with it. Methods can develop and change over time. They get updated, there are new methods, that sort of thing. Unfortunately, all methods to some degree depend on your subjective judgment. Now, you should always evaluate the appropriateness of any chosen risk methodology method for your environment. Don't just pick one because it's the one you always use. What's appropriate for this environment and these specific goals? That concludes Knowledge Statement 1.2. Knowledge Statement 1.3 of Domain 1 of the CISA exam. Knowledge of fundamental business processes, things like purchasing, payroll, accounts payable, accounts receivable, and the role of information systems in these processes. The purpose of this knowledge statement is to emphasize that before you can do a successful IS audit, you need to understand the underlying business process that's being audited. As we already mentioned, is this an accounts payable system? Is this a human resources system? What's the purpose of the process? What are its goals? How does it function? What are its constraints? Now you need to also understand the role that information systems play in these processes. Clearly, some business processes are more IS-centric than others. You need to understand the specific part that IS plays in any given business process. Information system auditing involves assessment of all the information system-related controls, but also understanding those control objectives, which is why you need to understand the fundamental business processes. It also involves identifying key controls that help achieve a well-controlled environment as per particular standards. Now, that may also involve the knowledge of certain industry standards and laws, and we'll visit that topic in later knowledge statements. Here are just some examples of fundamental business processes, using transactions as an example. A bank can have various transactions: mobile banking, ATM, over-the-counter, deposits, withdrawals, wire transfers, all sorts of accounts. A chain store might have point-of-sale transactions with credit card, extranet cash transactions with suppliers using electronic data interchange, ordering from vendors, those sorts of processes. Whatever the particular business you're auditing, you need to understand what it is that business does. And what are the particular processes that are most critical to that business, what information systems those processes use, and then apply things that we've looked at in earlier lessons, such as risk assessment, a risk assessment that's particular to the specific fundamental business processes for the organization that you're about to audit. Now, there are a few different ways of looking at and understanding a business better. The following few screens will show you a few of these methodologies. None of these do you have to memorize for the CISA exam. And we won't cover them in any significant depth. You just need to basically identify what these frameworks or processes are. The Zachman framework is a common one used for defining an enterprise. There are two ways to classify an enterprise that are combined together in the Zachman framework. The first is very simple. What is the enterprise? How does it work? When does it work? Who's involved? Where do they work? Why do they do these tasks? The second is more specific. You identify the specific business elements in that enterprise, define them, look at their representation, specification, configuration, and instantiation. Now again, it's not important that you go into more depth in Zachman framework. It's not important that you memorize it, at least not for the CISA exam. The goal here is to simply make sure that you're aware that this is one framework that you could utilize in your audit practice to help you better understand a specific enterprise so you will know their business processes in enough detail to be able to effectively audit their information systems. Something similar to the Zachman framework is the Sherwood Applied Business Security Architecture. Now, as you might guess, this is more specific to security in the business, and it looks at all the enterprise from a risk-driven perspective, looking at the architecture as it relates to information security. So this deviates a bit from Zachman in that it's not so focused on general business processes and an enterprise-wide description, but more focused on the risk associated with specific security architectures. The primary characteristic of this Sherwood Applied Business Security Architecture is that everything must be derived from an analysis of the business requirements for security. So you look at what that business needs for security and see if that's being met. It also involves an ongoing what they call manage and measure phases of the life cycle. In other words, you're continually measuring how close we are to meeting those business requirements, and we manage so that we make sure we're constantly meeting those measurements. I personally think that Sherwood Applied Business Security Architecture should be used in combination with Zachman to give you a more comprehensive understanding of the business. A third model you might consider, devised by Michael Bell, is the Service-Oriented Modeling Framework, often simply called SOMF. It allows you to model business and software systems to specify service orientation. In other words, we look at what services the business provides, what services specific systems within the business provide, and that perspective allows us to better understand the business itself. It can be used with any number of architectural approaches. In other words, you can combine it with the Sherwood model we just looked at. It can also be used, in addition to prepping an audit, to design any application, business environment, local or distributed. In other words, if you first consider what the business does, what service it provides, and then consider what software systems are necessary to provide that service, that will drive not only audits, but the designing of applications, technologies, and systems. And again, any of these particular options, Service-Oriented Modeling Framework, Sherwood, or Zachman, can be used in combination with others. The whole idea is not that you memorize each of these three, but that you be aware that there are tools to help you better understand the underlying business. You don't simply have to approach in an ad hoc fashion trying to understand the business. You can use one of these modeling tools to give yourself a deeper comprehension of the business that you're preparing to audit. That concludes Knowledge Statement 1.3. CISA Knowledge Statement 1.4. Knowledge of control principles related to controls in information systems. What we're going to attempt to do under this knowledge statement is to ensure that you, the CISA candidate, understand the different types of controls and how they function, and you can explain how those control principles relate to information systems. Primarily, we're concerned with internal controls. External controls would be laws and regulations that are external to a particular enterprise, but do impact how they handle information security in their information systems. But internal controls are the enterprise's own internal processes that have been implemented to achieve specific objectives while minimizing risk. They comprise the enterprise structures, procedures, policies, and practices that have been implemented to lower the level of risk in an enterprise. Now that includes everything from information technology projects such as intrusion detection system, anti-malware, to policies, to training, to procedures, everything within the enterprise that's meant to minimize risk and achieve specific objectives. And they can be manual or automated. Now in the information system world, we often think of automated things such as anti-malware, intrusion detection systems, and that sort of thing. But manual things such as having a second party confirm a payment over a certain level before that payment is processed. Well, that can be manual or automated, but it's still a control. Internal controls really consider two things. By implementing this control, what can be attained or what can be evaded? What can be attained? Let's take, for example, manual spot checks of source code. Someone reviews source code before the project is compiled and distributed throughout the organization. What can be attained by that? Well, first and foremost, better quality of software. We can look and see that all the basic software procedures were implemented correctly. What can be evaded? Well, at least some of the more obvious bugs will be evaded through this process. Internal controls and procedures have two categories. The general control procedures. Previously, we mentioned having a second party authorize payments over a certain level. Well, that's a business control. That's a general control for the entire enterprise. It may or may not be implemented through technology. Information system control procedures regard control procedures directly related to your information systems. How do we secure databases, web servers, and that sort of thing? All internal controls fall into one of three categories: preventative controls, corrective controls, and detective controls. Preventatives stop something before it occurs. Locking an office to prevent unauthorized access, using RSA tokens, encrypting a hard drive to prevent someone from viewing files, using a virtual private network to prevent eavesdroppers from monitoring your communication. Corrective controls are meant to either minimize or actually correct when a problem occurs. For example, data backup. You can put the data back to where it was and correct the situation. Detective controls help you learn that something negative has occurred. Now, these can be things that are physical or information security. In the information security realm, you're probably thinking of things like automated systems, intrusion detection systems, and things of that nature. But something as simple as a physical access log, an audit trail, access control list to server room, all of these are detective controls that help you detect what occurred and when. Now, it's not the case that any one of these three types of controls is more important than the other. A good system has to have preventative, corrective, and detective controls. And during your audit, you need to ensure that all three are in place to support the enterprise's objectives. Now, IS control objectives are top-level requirements that management sets for adequate control of each IT process. IS control objectives are first of all a statement of the preferred purpose or result to be attained by applying controls to particular information systems. In other words, by implementing this control, whether it be a physical login sheet, an anti-malware system, or whatever it might be, what is it you want to attain by doing this? What do you hope will be gained? IS control objectives are also procedures, policies, organizational structures, and practices, anything that's intended to reasonably assure that enterprise objectives will be achieved while undesired events are detected, corrected, or prevented. So we're looking at the entire process. We're looking at your company's policies. We're looking at the inherent organizational structures. That can include everything from something as simple as an organizational chart. Who do you report a particular issue to something far more complex and intricate. Any procedures, that you might have in place that might help assure enterprise objectives, this falls under the heading of IS controls. Here are some examples. Now, I note that these are very general. They're meant to be. This isn't telling you how to implement them. This is telling you the objectives. For example, ensure the integrity of the system, for example, an operating system. Ensure the integrity of sensitive and critical application systems, your financial data, your customer data. Safeguard your assets. That includes physical assets as well as technology assets. Ensure the effectiveness and efficiency of operations. It's not enough that things work, they have to work well. Ensure proper authentication processes for users. This is a critical part of information system security. Ensure the availability of any given service, and this is accomplished through disaster recovery planning and business continuity planning. There are other knowledge objectives later on in this course which will cover disaster recovery and business continuity in much more detail. Information system control procedures include all of the following, and let's talk briefly about each of these. Strategy and direction of the IT function. What are we trying to accomplish with this specific function? How does it integrate with the organizational goals? It sometimes occurs that enterprise goals change and technology changes, and a particular IS control or particular IT function may no longer fit with the strategy. System development procedures. We have lessons later on specifically on that topic, but that's one of the things you will check in an audit. Are systems being developed in a proper manner? And that ties in closely with, do we have quality assurance processes that are appropriate and that are being adhered to? What about the communications in the network? Do they meet security needs? Do they mesh with the enterprise objectives? Do they support the goals of the business? General organization and management of the IT function. How is IT, this particular function we're auditing, how is it managed? How is it organized? Are there operation procedures in place that support enterprise objectives? Are there appropriate physical access controls? If a database is involved, and it usually is with an information system, is database administration done in a way that's consistent with enterprise objectives? What about access to IT programs, data, and resources? Is it controlled appropriately? Are there appropriate system programming and system support departments to support the enterprise objectives? Of course, do we have business continuity planning in place that's appropriate and sufficient to support this particular business process? Do we have detective and protection mechanisms? All of these questions need to be addressed when looking at each and every IS control during the course of your audit. An audit work program represents your audit plan and strategy. It has procedure, scope, and objectives. It's basically a guide for documenting the various steps you take during the audit, the type and extent of evidentiary matters reviewed. It gives a trail for the entire process used. At some point, you'll want to do quality assurance of your audit process, and only through an audit work program do you have the trail necessary to do that. And it provides accountability for performance. Whatever approach you use to auditing, it always comes down to 4 basic steps. First is planning. You always assess risks first, and you develop your audit program in light of those risks. You also have objectives and procedures. Recall Guidance 5 that we looked at in an earlier lesson. Once you have your plan, you have to obtain and evaluate evidence. It's all about evidence. You don't have any preconceived notions about whether or not a control is meeting the objectives. When you're auditing, you seek evidence to determine the strengths and weaknesses of controls. Once you've done all of that, you have to prepare and present a report. There's usually a draft version and a final report. Just as important and covered in Guidance 35 is the follow-up. Were corrective actions taken to the issues you found during the audit? Were they fixed? Or do those negative conditions still exist? That's very important. Audit methodology are the standard audit procedures that are used to attain the objectives of the audit. This is a documented approach for performing the audit in a continuous and recurring manner in order to achieve the planned audit objectives. Audit methodology always has a scope of the audit objectives, and the work programs we previously mentioned. That concludes Knowledge Statement 1.4. CISA Knowledge Statement 1.5. Knowledge of risk-based audit planning and audit project management techniques, including follow-up. What this means is we're going to look at an approach to audit that's based on the enterprise's risks. As you already realize, it's usually not possible, or at least not practical, to audit every single function of every single IS that you have in the organization. All of your information systems are very complex, and checking each and every control in each and every possible scenario is usually impractical. Risk-based audit planning starts with identifying the key enterprise's risks. What are the risks that are particularly important to this enterprise? In other words, a risk analysis has been conducted. Now, for this to work, you have to have an understanding of the organization. What sort of business are they in? What sort of transactions are they conducting? What is the business environment? Now, by environment, we're talking about the information systems environment, their technology environment, and perhaps a regulatory environment. You also need to know what the business's control objectives are. What are they trying to accomplish by implementing certain controls? It's important to understand the type and nature of transactions that organization engages in. For example, B2B wire transfers are very different than consumer-initiated credit card transactions. That changes the entire scenario, what risks are present, and how one goes about auditing. You also need to understand the flow of these transactions and how they're captured in information systems. Remember, our focus is information system auditing, so it's not just the transactions, but how are they processed within computer systems? There are 4 different risks we're concerned about. Let's begin with inherent risk. Stated formally, the probability of an error existing that might be material, assuming compensating controls do not exist. This exists irrespective of an audit and is contributed to by the nature of a business. Put another way, certain businesses have certain risks that are just part of how they do business. If your business routinely takes in paper checks, then there's always the chance of fraudulent checks or insufficient funds. If your business is engaged in e-commerce, then you must have a website, and that website is susceptible to attacks such as SQL injection. Control risk. Now, formally, that is a probability that a material error exists which will not be prevented or detected in a timely basis by the system of internal controls. Put another way, you either lack the appropriate controls to detect an issue, or the controls won't detect it in time, or there is some issue, some difference between what you would like the control to do and what it actually accomplishes. Then we have detection risk. Now, this is very important to the auditor. Put formally, the probability that the information system auditor used inadequate checks and surmises that material errors are absent when in fact they are present. Put much more succinctly and simply, the chance that you, the auditor, miss something. This is terribly important to you as an auditor, and it's really combated by simply using all the appropriate standards, tools, and techniques that you'll learn throughout your study for the CISA exam. Now, if you take all 3 of these, inherent risk, control risk, and detection risk, and bring together into a cumulative risk, that is described as the overall audit risk. It's the summation of all the audit risk groups for each control objective. That last part's critical. You usually identify risks per control or per specific business activity. A specific business activity has an inherent risk. The specific controls for that specific activity have a control risk. The overall audit risk is broken down for each control. Let's use an e-commerce example. Let's say you have an e-commerce website. The inherent risk is web attacks such as SQL injection. You've put in place a specialized application firewall that's designed to prevent those attacks. The control risk is that that control may or may not adequately prevent all of those attacks. The detection risk is that in the process of doing an audit, you may or may not have detected any gaps in the control. Now, if you put all that together, we have an overall audit risk for that specific control, being the application firewall, that's there to help prevent attacks on a very specific business process, the e-commerce transactions. Gap analysis. Now, this term has been used in marketing and other areas to mean something a little different than what we mean here. Here we really have two issues. We have a product gap and a usage gap. Let's start with usage gap. In a usage gap issue, you have a control that if used totally properly would be an adequate control, but either the control is not implemented, or the control is not properly configured, or is not being properly used. There is some gap between the potential that control has to mitigate risk and the actual use of the control. Now, a product gap is when there's some issue the product itself is missing something. It's unable to fully meet your control needs. That's actually fairly common, which is why most security situations require multiple controls to address specific issues. Now, when doing your risk-based audit, there's some definitions you need to have in mind. Target of evaluation. This is the particular information security deliverable, the object for which assurances are made. What is it you're testing? Assurance activities are the things you use to test, the methods of testing. We'll discuss those at length later on. The security target. These are the security specifications and requirements that you use to test the target of evaluation. Put another way, assurance activities check a target of evaluation to discover whether or not that target of evaluation has met the security targets. A security protection profile is similar to a security target, but it's broader in scope. It's not about a specific deliverable, but it's more about general security needs of a given business or group. There are some risk-based audit definitions you need to be familiar with. We've used some of these terms already, and I believe you probably know what they mean, but let's just make sure. What is a control? I think we addressed this in earlier lessons, but let's be clear again. A control is anything meant to mitigate a risk. Now, that can be technological things. We mentioned previously an application firewall. That's a control. Antivirus software is a control. Intrusion detection systems, that's a control. But controls also include processes. Any sort of educational program to train people in security, that's a control. Any sort of process whereby supervisors double check something, that's a control. Now, an IT control objective is a statement of what you want that control to do exactly. General statements like make things more secure, stop attacks, those aren't useful. A control objective should be very specific. Risk is the chance that something bad will happen. Now, we've looked at this definition in multiple different ways throughout the preceding lessons, and you'll see it again throughout the course. The idea of risk is that there is a probability that something negative will occur and will have some level of damage. Evidence we've not yet talked about. Evidence is all about data. Auditing is not an art. It is a science. And like any science, it's based on evidence. You collect data to make determinations. At the end of the day, what an audit really comes down to is looking at the risks of an organization. That's why we're talking about risk-based auditing. Examining the controls that are put in place to mitigate those risks, and then gathering evidence that will determine factually whether or not those controls meet their control objectives or not. It's as simple as that. It all comes down to evidence. IT governance is the entire process of managing your information systems. Now, this is very important to audit because specific issues in governance can affect security. For example, What party is responsible for which aspect of security? Who approves changes? All of these things affect your IT security, and therefore they have to be addressed in your risk-based audit. That concludes Knowledge Statement 1.5. CISA Knowledge Statement 1.6. Knowledge of the applicable laws and regulations that affect the scope, evidence collection and preservation, and frequency of an audit. Certainly that won't occur in every audit, but if you routinely conduct information systems audits, it seems a guarantee that you will eventually uncover fraud. For this reason, fraud investigations or legal proceedings require the integrity of evidence be maintained throughout its life cycle. This is called chain of custody in forensic evidence. So for this reason, your audit needs to be conducted assuming there might be evidence of fraud or something criminal that will have to be presented in a court proceeding. Put another way, you need to handle your audit as if you were gathering evidence for court, and make sure you've maintained things like chain of custody. Now don't be too concerned about that at this point. There are later lessons and knowledge statements that will give you some general knowledge of forensics. The legal requirements include laws, regulations, contractual agreements. All these things can be placed on your audit or the auditee. Management and audit personnel in any organization have to be aware of these external requirements for computer system practices and controls, how your data is processed, transmitted, or stored. There's a need to comply with lots of different laws and lots of different legal requirements, and that has an impact on your audit. Now, what we mean by all this is every industry is affected by some laws. And in this lesson, we will look at a few laws from the United States. Now, depending on where you are when you take the CISA, usually the CISA exam will focus primarily on U.S. laws because that's where the largest number of CISA testers are at. However, they may throw in a few local laws for European Union, Canada, and other regions. So make sure you take the time to familiarize yourself with your local laws. But back to the actual audit. No matter what organization you're auditing, there are some legal requirements. There may be industry regulations that aren't laws, but are really important for that particular organization. There may be contractual agreements. For example, that entity has a contractual obligation with one of their clients to reach a certain level of information assurance. You have to be aware of all of these requirements, legal, regulatory, and contractual, so that you can put those thoughts into your audit and make sure your audit addresses those issues. There are a few essential areas that are covered under this knowledge statement. Let's begin with evidence. Now, in previous lessons, we've mentioned evidence is important. Evidence is factual data. Speculation really is not important in an audit. We're not interested in guessing, in supposing. We need evidence that shows certain things are or are not true. In respect to legal, regulatory, or contractual requirements, those are usually relatively clear. You need evidence that the information systems you're auditing, the controls you're auditing, either do or do not meet those requirements. Now, of course, that requires you to have in-depth familiarization with that particular requirement. Evidence goes hand in hand with audit documentation. You need to have very thorough documentation of exactly what you audited, how you audited, and what your conclusions were based on evidence. To some degree, some level of continuous auditing is necessary. That doesn't necessarily mean that a professional CISA auditor comes out and audits the organization continuously. It may mean such a simple thing as internal spot checks. It may mean log examination. It may mean automated systems, but something to ensure that not only did the organization meet its legal, regulatory, and contractual requirements today when you did the audit, but that they're still meeting them next month. Legal requirements are perhaps the most important. It is not the goal of the CISA to make you an attorney, and not all the major laws will be reviewed on the CISA. It's important for you to spend some time familiarizing yourself with appropriate laws. And that will be based on your legal jurisdiction, your industry, and facts of that nature. But you do need to be aware there are legal requirements that do impact your audit. Here's a few laws that are very important in the United States. HIPAA and high-tech. The Health Insurance Portability and Accountability Act of 1996. Now that's a very lengthy law, but most important for auditing is it identifies what is considered personal health information and how it has to be handled. This was augmented by the High-Tech or Health Information Technology for Economic and Clinical Health Act, which redefined what a breach is and gave stricter standards for notifying people in case of a breach. If you're auditing not just medical clinics, not just hospitals, but medical billing companies, health insurance companies, anything of that nature, then these two laws become very, very critical. And again, our goal is not to go in depth into every law, but to briefly introduce you to a few of the most important ones. Sarbanes-Oxley is strictly a United States issue. It does not affect other countries. It is all about publicly traded companies. So a privately held company does not have to adhere to Sarbanes-Oxley. Sarbanes-Oxley was a rather complex piece of legislation, and it was meant to address some financial fraud that had taken place in the early 2000s. Most important for IT is that publicly traded companies must keep electronic records for 5 years. The reason I point out this specific one is not so much that you have to memorize this for the test, but it gives us a great example of how we take a legal requirement, and that gives us a very clear control objective, and it's very easy to audit. If there are electronic records that don't go back 5 years, there needs to be an explanation or an understanding because you're legally required to keep them. Now the PCI DSS, or Payment Card Industry Data Security Standards, that's an extensive set of documents that could take an entire course in and of themselves. The CISA does not ask you to be a PCI DSS expert, but basically any organization that processes credit cards will to some level have to comply with PCI DSS. Now notice these are standards in the industry. It's not a law. It's the Visa, MasterCard, Discover, American Express companies saying, look, if you're going to process and handle credit card data, you have to do these things. And that applies in many, many countries. In fact, anywhere that you're processing credit cards, PCI DSS comes into play. So anytime you're auditing a company that processes credit card information, you need to be familiar with PCI DSS and incorporate that in your audit. Now, these are just examples of legal and regulatory requirements. An exhaustive list would be humongous. Depending on where you live and your industry, there can be any number of legal and regulatory requirements. You don't have to memorize them all, but be generally familiar with them. Here's another set of standards that the test will not ask you to memorize. I'm just giving you an example of all the industry standards out there. For cryptography, there are a number of ISO standards used around the world. You see a brief description of each here. Digital signatures, how to handle cipher algorithms, hash functions, how to manage keys, data processing. The point is, very clearly it can become overwhelming, the number of regulations, the number of standards that you need to be familiar with. The good news is you don't have to be an expert in these areas. CISA does not assume that you're an expert in cryptography by any means. It just assumes that you know which standards to refer to when conducting an audit if cryptography, for example, is a part of the business activity and you need to refer to some standards to see if they meet control objectives. And these are just here exemplary. You don't have to commit these to memory. When you're doing a report, there are some basics. First of all, obviously, who are you auditing, the organization? Who should receive a copy of this audit? And are there restrictions? Should this audit not be forwarded? Can it be forwarded to certain people? Basically, these are demographic issues. Who's being audited? Who gets to know about the audit? Then the scope. What was the scope of your audit? What did you audit? Now, I personally, this is not on the CISA. This is just my personal practice. I also like to identify anything that was omitted. If I conduct an audit and certain items were not audited, I want to point that out. These were not audited, and here's why. But for the test, you need to know your scope, your objectives. What were you trying to accomplish? The period of coverage. I audited for a certain period of time, and that should be sufficient for 6 months or 12 months or however long you think. The nature of the audit. Was it automated? Was it a team? Did it involve penetration testing as well as auditing or vulnerability scanning? What happened? The timing and extent of the audit. How in-depth was it? Timing is important because auditing at different times may give different results. For example, if you're auditing retail credit card transactions in a heavy holiday season, you may get different results than you would at a different time. My favorite part is findings, conclusions, recommendations, follow-up, reservations, or qualifications. What this means is, first of all, what did you find? What did your audit discover? Next, what do you conclude from that? Probably the most important thing is, what are your recommendations? If a particular control you found to be inadequate, how do you recommend they fix it? It's not enough for an auditor to look at an organization and say, this specific IT control does not meet control objectives. You need to tell them how they can rectify that situation. What if you found something did meet control objectives? Do you have any reservations or qualifications? For example, this might be a place to state that yes, this particular control does meet the control objectives, but that in your opinion, those control objectives may not adequately account for certain risks. Now you should put this in some sort of organization, grouping them by materiality, or by the intended recipient, or by the business group, or by the particular control, those sorts of things, some sort of organization. You also have to mention any faults you found and any constructive corrections. Normally your report will either be very large, starting with an executive summary, or the report will essentially tell your findings, and then there will be appendices that have the evidence to support your results. Either way, there has to be some way for the audit recipient to refer to your evidence. It's not appropriate for you to say, because I said so. You have to show the evidence. Now, oftentimes executives are not going to take the time to read all your evidence. Executives may simply read your conclusions, but the evidence needs to be available should they desire to look at it. Of course, your overall findings, conclusion, and your opinion, and always signed and dated. One tool that the CISA occasionally will bring up is the balanced scorecard. This is a way of looking at an organization. Now, it was originally designed as a performance management tool, so it wasn't really designed for audits. It was used to track execution of activities. Basically, it's looking at, here is an objective, how is that objective met? Sort of a scorecard, that's the name. Now, you can use this to measure controls, their performance against an expected value. And you can look at things from 4 perspectives. Financial perspective. How much did it cost? Was there a return on investment? Was money lost? Customer perspective. Sometimes security controls can be so onerous that they negatively impact customer experience. Well, that should be involved in your audit report. Internal processes. Did the controls affect internal processes in a positive or negative way? And then finally, innovation or learning. Have you learned something from measuring this control? Now again, the balanced scorecard was not originally meant for auditing, but it can be applied to the auditing situation. That concludes Knowledge Statement 1.6.